The number one reason your profits disappear is because your behavior changes, not because the market changes. When you make money, your internal system of evaluating your ability to trade in the market completely updates. You treat recent profit as information about your accuracy, and because of that update, your sense of risk completely shifts. You start to feel safer, you start to feel more capable, and you start to feel more justified in taking more trades with bigger risk. Now that shift changes your behavior. You trade more often, you increase size, and you relax the rules completely that you had set forth in the first place. And you engage with the market in a broader and less selective way. These changes feel reasonable because they are driven by recent success rather than by changes in market structure. And at the same time, the market will always remain probabilistic. The distribution of outcomes does not adjust to your confidence. Variance continues to operate at the same rate. And because your exposure has increased while uncertainty in the market has stayed constant, your account becomes so much more vulnerable. Now, losses that follow after this confidence boost are larger and they arrive way faster, and you experience them as sudden or unexpected, but they are a predictable result of expanded exposure on your end. The market did not shift against you. Your behavior shifted towards greater risk, and this pattern repeats because of how you were taught. You were taught how to make money. You learned to associate profit with correctness and your ability to trade. You were not taught how to keep money, which requires behavior to remain the same regardless of whether you've won or lost. And because keeping money was never trained or never driven into your brain, success becomes a trigger for change. Each win you take authorizes the ability to adjust because you won, so you're amazing. Now, each adjustment will place every single profit that you made previously back into variance, and over time, the variance of the market is going to remove them. Now, the learning direction that resolves this operates at the level of repetition. Keeping money requires repeated exposure to the same decisions, the same risk, and the same rules across both wins and losses. And when behavior stays constant, the outcomes lose the authority over your decision-making process. And when outcomes lose authority, profits stop triggering changes in your behavior. Your profits disappear because your behavior changes after success. When learning is centered on repeating the same actions over and over, profit becomes something that accumulates instead of something that resets the cycle every single time it occurs.